Welcome back to Market on Close. Time now for Options Corner. Joining us is Kevin Green, Senior Markets Correspondent. Okay, Kevin, so the S&P 500, fifth day of losses. What levels are you watching there?
Yeah, we are seeing obviously losses for today, but we have been able to maybe have a little bit more compression, be able to hold some really key areas of support going into today and pretty much throughout the day. And let's see how we actually close here. This morning, we actually kind of talked about the 6350-ish area as a key area of potential support. We got within 3 points away from that level and saw some buyers really trying to step in. And what you would like to see going into the close is us continuing to try to make higher highs as well as higher lows based off of that level going into the close as well. And maybe that's going to be the case. You actually do have a significant amount of activity at the 6400 level. That's going to be your first major area of resistance going into the close just based on the morning levels. Now, if we kind of get a little bit more granular on the volume chart for today, 6350 once again to the downside is going to be a very key area for us to be able to hold. You don't want to break below that level because you could look at even some more aggressive action to the downside, even up to 6320, which we did see some earlier flows there. And then to the upside, once again, 6390 to the 6400. Overall, this is a compressed type of day. We did not really lose the market so much compared to yesterday. But obviously for the bears, you are looking for maybe a little bit more enthusiasm tomorrow if you do get some bearish commentary coming from Jerome Powell. Sam, I do want to highlight, though, there is a little bit of a lotto trade that has been placed today that I thought was very interesting. And these are for options that actually do expire for tomorrow as well. You're actually seeing some aggressive call buying activity, very out of the money. You're talking about the 6450s to even the 6500 calls for tomorrow, which is interesting. Will they hit? Will they not hit? Obviously, we will find out. But there is maybe a tone here for some traders in the options market that believes that Jerome Powell will hit the mark tomorrow and have maybe some bullish commentary or some dovish commentary, and the market could see a significant rise to the upside here. You also did see some downside protection being put into place, but a lot of the flows that we saw yesterday really does not match kind of the volume for today to the downside, and you saw a little bit more upside optimism for tomorrow's expiration. So I'm actually looking forward to tomorrow. Let's see how this actually all pans out here. But once again, you have some traders that are trying to hit a home run for tomorrow and think that Jerome Powell might be able to pull this one off.
Yeah, certainly some interesting positioning ahead of that all-important speech at 10 a.m. tomorrow. You've been watching the dollar versus the Fed funds rate. What are you seeing there, Kevin?
Yeah, this is actually a very, it's not very unique, but we have to kind of keep our eye out in a little bit more here. If we're looking at the Fed Fund futures for September compared to the U.S. dollar or the dollar index, if you will, there is an inverse correlation that has taken place. And for today, you actually did see the dollar strengthen rather aggressively. And actually, if you look at a 3-year weekly chart of the dollar, you could actually make a bullish case that the dollar may have more room to run to the upside, maybe up to that 101 and a half-ish area. And if that's going to be the case, one of the big catalysts could be the delaying of rate cuts being priced into the market. As we push out more rate cuts on those Fed Fund futures, it seems like the dollar is going to gain a little bit more steam. And rightfully so, if you kind of think about the mechanics, rate cuts are usually associated with economic weakness. Economic weakness probably leads to the dollar being weak relative to other currencies and vice versa. If we delay rate cuts, dollar strengthens because the economy is, for the most part, holding up, or that's the perception. And that might not be very conducive for equities. So you want to be able to find a direction here. The equity market obviously wants to see rate cuts being priced in, but if you're kind of looking at some of the FX markets as well as the commodities, maybe a rate cut is not really necessary for September. We're still pricing in a cut, but just keep your eye out on this. If we do see this backing out a little bit more tomorrow after Powell's commentary, you could see the dollar rip a little bit higher. You could also maybe see some pressure on the equity market. Who knows? I think this is going to be a coin flip tomorrow when it comes to equity trading just in general, and I think we will probably see a significant amount of intraday volatility.
Yeah, that's what makes it just so much more exciting, keeping us on our toes for this Friday, this summer Friday that's going to be happening tomorrow. But it makes sense, as you say, as far as some of the FX positioning when you've got the Fed Fund futures at around 75% for that September cut. Certainly. Any final thoughts, Kevin, as far as what we're seeing in the market today as we've got 23 minutes to go for this Thursday? I mean, I'm just looking at the sector breakdown. I mean, you've got energy up, you've got materials up, but other than that, most of the sectors in the red today. It seems like a little bit of a continuation of what we've been talking about, certainly in recent sessions. It looks like the Russell 2K, so some of the small caps are catching a bid today. I'm quite interested certainly in that. But it looks like we've got these kind of like competing narratives with regards to some of the question marks around the AI story, as also we look ahead to what is going to be a big day as far as monetary policy setting.
Yeah, I would agree with you. I mean, what you look at today compared to yesterday is a lack of breadth in the market. That gives you a little bit of concern. You're not really seeing that defensive, full-on defensive trade where we still have 60% of the stocks in the S&P 500 to the upside. That's just not happening today. Also, when you're looking at it technically, if we go to this 6-month daily chart within the deck here, we are actually below that 20-day moving average, which right now is sitting at around 63.80. We're trading at around 63.69 right now. A close below that 20-day moving average. It's not like the end of the world, but that's a very key area for us to really try to hold. Now, that also coincides with this channel that's been developing pretty much since May of this year here, and we've been able to respect not only just the resistance level, but also the support. And now we're going to be testing support here at the close if we close at these current levels. And then you start talking about the 50-day moving average, and do we actually go down and test that? And this stair-step, approach to this market to the downside if we do see some form of a failure. So under the hood today, not as great as what we saw yesterday. Once again, we have some optimism when it comes to the options flow for tomorrow. Maybe that's going to come to fruition. And if not, and we do see a breakdown, that RSI where we had a trend where we were making higher highs as well as higher lows, we are testing that trend line right now. We have a failure tomorrow. We go down tomorrow because of some commentary. You're looking at the 50-day moving average. You hit the 50-day moving average, then you have a really big question on your hands as to how much of a pullback may we see over the coming weeks, given the fact that September is generally a weak month in just a trade on a historical basis. So kind of a make or break level here if you're looking at tomorrow's setup. And given the events, once again, I think we're going to see some fireworks.
Okay, we'll be watching, and we'll see you in about 20 minutes after the bell. Thanks so much for that, Kevin Green.